What's good, everybody? It's me, Lyric Levester. I'm just here creating a video on backtesting the Forex market. Currently, we're looking at one of my favorite pairs, British pound versus the US dollar. I already have everything outlined from this week and last week. So if we look at last week, we can see Sunday, Monday created a high, and it also created a low off of Friday's high, and it respected it and it went down. And on Sunday, Monday, it also created a low, and on Tuesday, the next day, it respected that and went up. So if you would have placed a buy order within this area right here off of the previous day low, you would have been able to caught 131 pips. I was able to catch that, so that was one of my trades that I took last week. And as you can see, the market normally follows a current structure. I never trade based off of if it doesn't follow the previous day high or low, I'm not trading it. If it doesn't follow the previous day or the previous week or the previous following week, I'm not trading it. So unless it follows my guidelines for my trading plan, I'm not going to trade it. So as you can see, each day it creates a high and a low. And we have 3 different sessions. We usually have a Asian session, which usually happens after the day crossover. So, and then we also have London session, which is normally 3 a.m. my time. And we have New York session, which usually starts around 8 or 9:30 in the morning. But normally my trading times vary. Sometimes I do trade during Asian session. Majority of the time I would try to catch it during New York session or London. But it does vary, but as long as it's following my guidelines, I'm going to trade it. So we got this new week, the week that we're currently in. As you can see, Sunday, Monday, it had this high. As you see, it consolidated, and then it eventually dropped, creating this low. Coming Tuesday, it respected this low, and it went up. So if you would have placed buys, if you would have placed your buys within this box that I have right here, you would have won the trade simply because price respected the previous day's low. If you would have placed a sell, you would have been out of luck. Normally, whenever I trade, I try to put at least a 10 pip stop loss. I control my risk, but my reward I leave open. So that way I'm opening myself up to wherever the market's going to lead to. It could shoot up 100 pips for all I know. But all I know is I'm risking on my end is 10 pips. So that way I am able to trade another day and not blow an account. And that's another thing. You guys must use proper risk management. If you have a $100 account, you do not want to trade with more than, I would say, $2 a pip. Unless you know what you're doing, because if you lose 10 pips in a row, risking $2 a pip, you're gonna blow your account. And another thing is you guys gotta know when to stop trading. Like if you're over trading, you gotta have a plan, because we're all in this to trade another day. We need to properly grow your account based on your own trading plan and your risk appetite. Me, every time my account grows, I'm going to up it a little bit on my risk. I'm gonna up my risk more. So I'm gonna be risking more money. But my stop loss never changes. I'm always gonna keep my stop loss at 10 pips. So if you would have took a trade and you'd have seen Tuesday create this high, and you'd have placed your stop loss within 10 pips. 10 pips from here is right around here. You could have risked 10 pips. Should have been right around there. That's about 10 pips. You would have been safe taking this trade and riding it all the way down for 138 pips. So basically that was the midweek reversal. And as you can see, it's consolidating right now because we are in Asian session. So Forex is basically about a game of reaction. Whenever I place my highs and lows of each day, I normally just react. If it doesn't do a certain thing of what I'm predicting the market is going to do, I'm not going to trade it. So if I say, hey, I'm predicting, last week on Wednesday, if I'm predicting it's going to respect this, if it doesn't respect it, I'm not going to trade it because my entry is going to be right on the previous day low. So if it doesn't respect it, then I'm not going to trade it. If I see it break, I'm not going to trade it at all. But if I see it respecting, I'm going to place my trade, put it in right where my box is at, and set my stop loss at 10 pips, and then wake up to 120 something pips profit. That's why I don't risk my reward. I'm gonna achieve as much reward as I can, but my risk will always stay the same. I'm always gonna risk 10 pips, and once I'm in profit, I will place my stop loss in profit. So that way, if it does go against me, I will come out in profit instead of a loss. Or I would just close out the trade in entirety. So with that being said, this is mainly what I do for my back test. This does look like a head and shoulders formation right here. We got the head right here. We got the head formation right here. We got the left shoulder and the right shoulder. That's what it's looking like right now. So yeah, we are in a downtrend officially. I'm not sure how much longer it's going to go down, but we'll see coming up Thursday. I already did my trades for this week, so I will be waiting for next week. And another video will be coming up soon. So with that being said, thank you for watching my video. Stay tuned for more. There will be more coming out as the week follows. Peace.